Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up for this Monday, April 27, 2020, and the time now about 2:25 in the afternoon Central Time. So as we take a look at what's going on in the market, a powerful day to the upside in the metal markets. The gold market down about $9, silver only down a penny and a half. Now the markets are going to settle lower than this. Settlement prices come in at 12:30 p.m. Central Time. So as we look at what's going on here, we see that these markets are they're higher than that because you're going to be at 1534 in the silver, 1726 in the gold market. Copper's right about here. You're about $3 lower on the settlement price in the platinum, all from memory, but I know about where they're at. Obviously today, a down day in the energy markets as the ETF USO, again, fifth time in 2 weeks, revises how they're going to hold futures contracts that make up this ETF. And today I'll never understand it, but they come out and they tell the market over the next 4 days, they're liquidating all their front month June contracts. Bingo! Don't make bids, don't bid up for the market. They're coming to you to dump all those contracts. Away they go and they'll replace them in back months, which they'll be higher. I mean, you can't telegraph like that, but I don't know. I guess they had to under SEC rules. I'm not sure about it. But in any case, as we look at the metal markets, we're in that consolidation phase. I think you'd expect an up day in the stock market today. Today was the day that we saw Italy start reopening, Spain, the UK will do certain things. I don't know how far they're going to get. I haven't read their whole story yet. We did see over the weekend another negative where China has locked down another city of 10 million in a full quarantine. But more times than not, what we're hearing now is we're at the other side of this COVID-19 in terms of trying to reopen. We don't have a treatment that we know works yet. We certainly don't have a vaccine. Plenty of fear, but first things first. The market's got that euphoric feel. Up in the stock market, down in the gold market. It's a risk-on environment. When we take a look at gold, it starts off the week down about $11. You can see what it's doing right here. You can see the price action. It's been one where the market has been successful in broad steps, but it hasn't been able to put a swing line together yet that is bullish. The pattern has been one of lower highs and a lower low. That is not bullish. That's a bear pattern. To negate that pattern and turn it bullish, you want to get over 1764.20. The market is nowhere near that at this point. The market is about 36 lower than that. Where's the support in the market? Near term's the 18-day average of closes. It proved itself back here. I would still say that that's the support area in the market. Resistance, the upper Bollinger Band, and frankly, you haven't hit it since the beginning of April. You've gone most of the month without hitting it, and it's very close to that 1800 zone. When we look at momentum, down. So I have a chart that nothing's agreeing with each other. I have the swing line down, but it's fought by the bias being up. When you're over the 18-day average, my filter says that's a bullish bias. Under, it's a bearish bias. So even though the swing line's down, it's countered by the bias of the market, and momentum is tugging on the market to the downside. And I do believe momentum leads price. Price doesn't lead momentum. In the gold-silver ratio, well, we've seen that 125 was too high of a number, but the market's come home to roost in the 111, 112, and that means you need 112 ounces of silver to buy an ounce of gold, and it's not a fluke. I mean, I remember when the ratio was way less, 30s, 40s, 50s. It's nothing like that. It's just gotten out of control, and it left even a norm of the 70 to 85 level that it had in 2020 and has gone up another third on that. When you look at silver itself, it's similar to gold. It has a pattern of lower highs, lower lows. Now, as I said, the settlement today is going to be, I think, 1734. So is it going to be under this 18-day average of closes? Yes. So going home, I think the bears have control of the market now, since the bias would be down, the trend is down, and stochastics are pointing lower. But the question on trend is interesting. Let me come over here. This low is 1527.50. Today you went into a pause. Why? Because you can argue while you have the lower highs, you can also say I have higher lows, even with the lower settlement today. You have to take out 1527 to get the bears back into play. When that happens, could we be arguing to get down to the lower Bollinger Band? We could. But we also are going to take all these numbers and crunch them in against that 18-day average. You're liable to be going into a nothing pattern in silver. I'm wondering about that. Copper market. Higher high, lower low, sort of caught between these Bollinger Bands right now in an overbought market. Number one, not trending. Certainly, we can see momentum's been up, but overbought now, and prices climbed with that momentum. But it's had great run-ins with the upper Bollinger Band, and you can't seem to get over that. And remember, 95% of the time you'll close within that Bollinger Band. It's an algorithm designed to do that. In the platinum market, the platinum market has got this pattern now, higher lows, and it's had higher highs. So it went back into an uptrend. The bulls would lose control of it very quickly if prices got under 764.60. And unfortunately, that number is just above the 18-day average. I like when the 18-day average is above a key number, because to get back to this number, and it often goes there, it has to go back into a downtrend. You're almost asking for it to then do a spin back up. Too difficult of a trade. In the palladium market, you're back down to the lower Bollinger Band. You've had a pattern of higher lows, higher highs with the bias down. Something else happened here too. If we take a look Friday, you had a bearish crossover where the 18-day average got under the 100. That's often a bearish sign, especially for those that follow moving averages. The odds of getting and staying under a Bollinger Band, 5% of the time, so it fell to it and it held it. That's not bad action. The dollar index, interesting. Again, look at this line in the sand. And I've been saying, as the dollar's entered what I call a pipe formation, if you look at the Bollinger Bands, they've narrowed in and it's like a pipe. And now price is spinning within it. You start churning around and getting a lot of false signals when that happens. Today's signal in it happens to be one where the market got under 99.99, couldn't stay under the 18-day average, and it's trying to stay over it. At the same time, momentum is trying to roll down. Could this turn bearish? Well, on this pattern, it'd be very hard. And it's lost its bullishness, but it's not turning bearish because it has this higher high, lower low right into that number. Probably more of a churning type market than anything else. You know, one of the things that we try to do here, and we do it for you all the time, is teach. And teaching gives you knowledge. Teaching gives you a bit of a flow as to where the market's at and things to look for. With our good friends at Modern Trader and Futures Magazine, we've put together our technical indicators covering all these different subjects for you. It's very simple to get. It's free. We made them into a PDF, a two-part PDF. All you need to do is go to our website. You can either call us, 866-973-2077, or you can go, and when you're on the website, you'll see on the bottom right our free offers. And in our free offers, just click that on, fill out the form, away you go. If you're watching me on YouTube, just click up here. It'll take you right there as well. I'm Ira Epstein. You have a great day. I'll see you all tomorrow afternoon. Take care now.